Alright, what's going on, you guys? It's Royce Jacob. Welcome back to the channel and welcome back to Sunday Stock Watch, series I post every Sunday where I let you guys know what stocks I'm keeping an eye on going into the trading week. So, as always, we'll go over each topic that we're going to be discussing, then we'll dive into each one individually. In front of us currently, Tesla on TradingView, where we will be looking at all the charts today. I do want to preface the video by saying this, you guys. I'm not personally involved in almost any of the stocks that we're covering today. If you guys have kept up with the channel and you know what the channel's about, then you'd understand why. But I do still feel like this information will be valuable to you guys, so that's why I'm choosing to cover these stocks. Okay, so of course Tesla, we got to kick it off with Tesla. We will then move into this news about Tesla and Apple. Okay, so two kingpins in the market, two absolute titans of industry right now. Tesla and Apple's stocks surged 5% to record highs, significantly more than that over the course of last week. And I mean, I wouldn't be surprised at all to see more to come. But announcing their stock split, the stock split announcement did definitely boost both of their stocks. And I'll let you guys know again when we get back to the charts what I think that potential price action could look like. All right. So after that article, we will move into some earnings. So this article and the next one are covering some earnings. This one, Marvell, which is a 5G play. And then we go on to Palo Alto. And again, those are, as this article states, lead software earnings focus next week. Okay, so we'll talk some earnings. We will then move into to some of the psychology behind trading. Okay, so again, we'll talk the majority of stocks in the first part. If you guys want to bail out after that, that's perfectly fine. But I do want to talk to you guys about this great CNBC article. Okay, so trading apps like Robinhood are having a moment, but users should be careful. Okay, so just want to read you guys a few paragraphs here, give you guys my thoughts on this, because I do feel like if you're a trader in this current market, this is very important information that you want to have. Okay, so we'll cover that. I then want to show you guys a few charts. Okay, and this will kind of I will segue this article and kind of my fundamental beliefs around this article into these charts and why I believe these charts are important. So we'll take a look at that at the end. And yeah, before we get into it, guys, as always, if you do want to gain value from this video, I'd appreciate it if you gave it a like. Subscribe to the channel if you're new around here, and check out my complete portfolio and daily newsletter. First link in the description if you do want to know what plays I have in this market. Okay, so again, I focus more on smaller, more up-and-coming small cap plays. Tesla and Apple, I love them as companies. I think they're great companies. I just don't prefer to play them myself, okay? But again, if you do want to know what I am playing, you can check this out. 7-day free trial. I just added that not too long ago. So give it a shot for a week. If you don't like it, then that's perfectly fine. I'll see you later. But if you want to stick around, again, $20 a month, as you can see here. Okay, so again, first link in the description. Appreciate you. Okay, so Tesla right here. As always, you guys, we do have to cover the fundamentals. We'll cover the article first, and then we will dive into the charts. All right, so Tesla, Apple surged 5% to record highs as both companies prepare to split their stock. Apple and Tesla, good old big dogs. Okay, so I'll just read you guys the key highlights here, maybe a few lines here, but Tesla and Apple both surged 5% to record highs on Friday, so that's Friday alone, as both companies prepare to split their stocks next week. Tesla stockholder record date is at the close of business Friday, while the Apple stockholder record date is Monday, August 24th. After the respective record dates, Tesla and Apple stock splits will go into effect and trade at their new split adjusted price on August 31st. Okay, so investors continue to bid up shares of Apple and Tesla ahead of their respective stock splits. Both California-based mega-cap tech-focused companies surged around 5% to record highs on Friday. So we'll read this one, last one, and then move to the charts. For the week, Tesla is up 27%, while Apple is up 8%. So still so significant for the size of these companies. Again, Apple just last week, which we covered in yesterday's Waves Weekly, did surpass a market cap of $2 trillion. First public U.S. company to do so in history. Huge news. So 8% is a huge gain. That's almost $200 billion in just a week, all right? And then Tesla up 27%. Tesla is just an absolute madman, which we will go on to look at in the charts once again. And since the announcement of their respective stock splits, shares of Tesla are up 50% and shares of Apple are up 27% as of Friday afternoon trades. Okay, so if you guys caught the video that I posted yesterday where I talked about the stock split and all these little TikTok traders and retail Joes and Davey Day traders talking about the stock splits, I even have people contacting me about the stock splits, and I want to preface this in the nicest of ways possible. Like, I understand why the stock split is having such a positive impact on these stocks. Again, there's a lot of people think if you've been involved with the trading landscape and have played this game for a while, then you obviously know that a stock split is not just printing stocks. You're not just creating new stocks. Okay, so imagine you have a pizza, right? It's a full pizza. A stock split is cutting that pizza into 5 pieces. So you get 5 pieces. You get 5 individual pieces instead of one big piece now, but it's still that one pizza you had initially. Okay, you don't replicate. You don't have 5 full pizzas now. But that's weirdly what a lot of people think. And again, I get it. It's great that people are getting involved in Rob. Again, that's what that's what this CNBC article is kind of covering. It's great that people are getting financially savvy and trying to become financially literate and educate themselves on this stuff. But it does make for very naive individuals. Okay, so there's a lot of people who think that, again, Tesla, the TikTok traders were like, this is a generational wealth opportunity. If you buy a share of Tesla, buy a share of Tesla or Apple today, you'll have 5 in a month. And that is true, but I think people think that you just have 5 extra money just like that, okay, which is obviously not true. Okay, so that said, there's my little rant on that. Let's take a look at the technicals. I'll let you guys know what I'm thinking here, okay? So I'm pretty confident that this is what will play out with Tesla. Okay, so I do believe we'll see a pullback. You can see this upper line prior to a few of these breakouts, this line of what has been used as both support and resistance since the beginning of July. Excuse me. I do think we'll probably pull back to this area. You can see here, this area also coincides. This area also, this upward trend line that, again, it's still an uptrend. It's still technically, even if it does come down and correct to this level, we'll still be in an uptrend. So remember that. That's why the green arrows here. I do still think it will continue an uptrend, even at this crazy valuation right now, which is Tesla is at a 380, almost $400 billion market cap. That's absolutely insane. Okay, so anyway, I do think we'll see a pullback down here, no matter what happens. Just from a technical perspective, there's a lot of traders involved in this stock. You guys, keep in mind. Been in this game for years now. Tesla for a long time has been the most traded, most shorted up until now, not anymore, but Tesla has an extremely high volume for a stock of its size, and Tesla is a very, very highly traded stock, okay? So you have to remember, there's a lot of algorithms in play here. There's a lot of high-profile players, a lot of whales who hold Tesla shares, and they probably will they will be the catalyst to that correction down to this area, which does coincide with the 21 EMA. That's again, you guys, I don't talk about those all the time, but they are still important, and they do still serve, as you can see, around this area as a solid line of support or resistance. So I do this level around 1750 to be specific does coincide with about the 21 EMA. It does also almost perfectly coincide with this previous high that Tesla hit back in mid-July. So if I was betting man, I might pick up some shorts, probably not, just because I've learned my lesson one too many times trying to short Tesla. So I'm probably not going to short Tesla, but you guys can definitely hold me accountable to what I'm saying right now. I do think Tesla will likely pull back to the 1750 region. Okay, again, after that, just bounce off there, very healthy correction, and then probably once again continue that upward momentum, because Tesla is an absolute phenomenon right now, okay? So Tesla, I do want to show you guys this as well. So Tesla's PE ratio, which is a price to earnings ratio, is at 1,000 right now. A very important thing to remember is that a healthy PE ratio is about 15. Okay, so a historical PE ratio is about, I'll just bring this up right now. I was going to bring it up later, but so this is the S&P 500. Again, you guys, this is a very good way. This is how I choose. So SPX, if you're looking at a stock, is pretty much the top 500 companies in the U.S. equity markets. Okay, so very good way to sum up just U.S. equities, tech companies, whatever, etc. in a nutshell. And you can see here that we are in. Okay, so this is like the culminated price to earnings ratio, right? Forward PE ratio, and we're currently at a 28, which is pretty high. Again, standard in the green is about a 15, as you can see right here, maybe even a little lower than 15. So 20 is stocks are in a bubble. We're currently at 28, which is stocks are in an extreme bubble. The last time we saw levels like this, aside from this, because this is a glitch in this chart, is the dot-com bubble. Okay, so in the early 2000s, when tech companies first came out, we saw a very distinct bubble where just you could put .com at the end of anything, and it became overvalued and sold. And that's kind of where we're getting into now. Okay, so remember, at the peak of the dot-com bubble, the average was 45. Tesla is at 1,000. Okay, so Tesla isn't only at 45. It's over 20x that. Okay, so it's over 20x the most, like, the craziest PE ratio in history in the greatest tech bubble in history. Tesla is 20 times that right now. Okay, so just keep that in mind, you guys. Be careful with Tesla. I've been proven wrong way too many times with trying to short Tesla. And again, I love Tesla as a company. I think Elon Musk is a great entrepreneur, great marketer. I think he's doing great things for the world. Probably one of the most valuable people on the planet. Tesla, great aesthetic, great mission. I think they're going to be around for a very long time. And I do think that net, they will continue to go up over time. But I also want to show you guys this if you're invested in Tesla. Okay, so sorry we're spending a lot of time on Tesla, but I do think just the principles that I want to cover right now can be associated with almost any stock in this current very volatile, highly shiny object-driven market. Okay, so let's zoom out back to somewhere where I have to expand the chart like this just so it looks right. Let's go to the 5 years and go to the weekly candles. Okay, so again, look at that. Okay, so that's what Tesla looks like right now. And I remember trading Tesla over the past, I've traded Tesla since like 2016, you guys have to keep this in mind, okay? So I've been watching Tesla for a very long time. This is insane. This is what a bubble looks like. I've played many bubbles, as you guys know. Again, if you tuned in, I played cryptocurrency bubble, the cannabis bubble recently, the pharmaceutical bubble. Like, I know what a bubble looks like. This is factually a bubble, especially with a PE of 1,000. Like, it's okay to think that this is going to go up, continue to go up, and it very well could. I don't doubt a single... even a piece of me doubts that this could go up even higher, okay? Because that's the beauty of a bubble. That's what a bubble is, okay? But I do think it will pop at times, and I do want to show you guys some historical references that I personally remember and I personally traded. Okay, so you can see here just for... we won't go too super deep on this, but I just want to show you guys what's possible here. Okay, so Tesla right here. We went from, in December of 2016, again, I remember this specifically, 2016, rallied up to the middle of June, so about half a year. We went from $177, $180 to $380. Okay, so over a 2x in half a year. It doubled in about half a year, which is pretty similar to what we're seeing right now. Okay, so after that, we saw in 2 weeks it go from $380 down to $300. Okay, so about a 25% correction, nothing too crazy. And then you can see here it bounced around for a while. So it went flat, and then ultimately corrected in December of 2018, this was mid 2019. Okay, so this was December, this was late 2018. I remember this when almost everything pulled back. But you guys remember, things go in cycles, things work in cycles. Again, 10 years from now, Tesla, I'd put every dime I have into the fact that Tesla will be higher 10 years from now than it does. But 2-3 years from now, I don't know, you guys. That's what you have to keep in mind when we're seeing such growth like we're seeing right now. It's just important to take historical references into consideration, especially if you're newer to this game, especially if you're newer. And again, that's perfectly fine. That's great if you're a newer trader. You just have to look at the historical data to know what can possibly happen, okay? And that's kind of the main thing I want to get through. Okay, so that's Tesla. Sorry for that rant again, you guys. I just think it's important to know that, and important that I did really want to share. Okay, so that said, let's take a look at Apple real quick. I did just cover this yesterday, so I'll keep this quick. Apple, absolutely nothing from a technical perspective is stopping Apple. If we do see a correction on Apple, it will probably use this area that was once resistance as support. So at the very most, let's go to the daily candles here to make it a little easier to look at. So if Apple were to pull back, which I wouldn't be surprised if it does just because it's ripping so freaking hard. Again, you guys, Apple almost added a Tesla over the course of a week. Not quite, but you guys get the point. Added $100+ billion in the course of a few days. That's insane, okay? So I'd be surprised to see Apple now use this line that was once resistance, as you can see here. Resist, broke out as now a line of support. So I wouldn't be surprised to see a correction in Apple down to the 450 region. Again, Apple is just, if it does, it could very well continue to just keep ripping, as can Tesla, as can a lot of the stocks within the tech sector right now, just because we're seeing such hype around this sector and these large cap stocks. So again, you guys, it wouldn't surprise me in the least to see these keep ripping, but if it does pull back, it will probably likely use this what was the line of support as the line of resistance. Okay, so that's Apple. Let's move on to some of these earnings, okay? So Marvell Technology, so 5G play Marvell. I imagine a lot of you guys have heard of this stock. Great stock, 5G. I'm bullish, very, very bullish fundamentally on the 5G sector, have been for a long time. It's very evident that we're trending digital. Everyone's on their phones more and more every day. Everyone's using more bandwidth. You need faster bandwidth. 4G is, we had 2G, we had 3G, we had 4G. Did we have 2G? Sorry. We definitely had 3G. We had 4G. 5G is the obvious next evolution of that, and it's faster. People want things now. Everything's trending digital. Everything's trending faster. Okay, so 5G, makes perfect sense. So reports, Marvell reports next week. Wall Street expects earnings growth. Of course, Wall Street expects a year-over-year increase in earnings growth or higher revenues when Marvell reports earnings for the second quarter, reports results for the quarter ended July 2020. The earnings report, which is expected to be released on August 27, 2020, might help the stock move higher if these key numbers are better than expectations. On the other hand, if they miss, the stock may move lower. Okay, so that's about the most generic statement you could ever put in one of these articles. So duh. I mean, if they impress, I mean, okay, so this is something that I've been saying when we cover earnings in these Sunday Stock Watch videos, okay? At this point, because the markets are so inflated, let's take a look at Marvell right now so I can show you guys what I mean. Marvell, where the heck is it? Where's all my 5Gs right here? Oh my God. Okay, sorry about that. Oh my God, no, that's Marriott. Bear with me, guys. I'm sorry about that. Okay, there we go. Marvell. Okay, so Marvell right here. Drew out a little good old couple arrows for you guys. So Marvell, obviously 5G at this point, but prior to this rally over the course of the past few months since the March lows, now that everyone's a trader, everyone's doing their research, 5G is a very obvious play. So 5G makes perfect sense. Obviously 5G once again is the next evolution of digital, how we're going to communicate as humans on digitally. Okay, so 5G, obvious evolution, and it showed that a lot of these 5G companies, so Skyworks, Qorvo, Corning, are popping off, rightfully so. Again, they're great companies, they are doing well, but from a technical perspective, which again, you guys, I have to remind you that even I always say this, fundamentals before technicals. I'm like 70-30 fundamentals to technicals the majority of the time. But especially in this market when there's so many whales, so much big money, so many big high-profile players involved, they have algorithms, they have algos that will out-trade you, that will out-day trade you, okay? So what I'm seeing here is a pretty... not quite textbook, but pretty close to a textbook head and shoulders pattern. I wouldn't be surprised to see Marvell... Again, okay, so coming back to the earnings, they're going to have to extremely impress in earnings to see this green arrow play out and continue this uptrend, because they still are technically in an uptrend. I mean, this is a lower low now at this point. So it did technically set a lower low. It is now in a downtrend, and it is printing a head and shoulders pattern. So from strictly a technical perspective, again, bullish on 5G fundamentally. I think a lot of these companies will do well over the long term. Short term, I do think we'll see a pullback in Marvell down to the $27 region. If you guys are invested, $28 region maybe. So a decent 10-15% correction there. But again, you guys, after it bounces off this, it probably will continue that uptrend no matter what the earnings come out to be. Again, if they've extremely impressed in earnings, will probably just rip up and it will break what is now a downtrend, but solely from a technical perspective, we'll probably bounce off this area. Okay, so let's move on to Palo Alto and Salesforce. Palo Alto Salesforce lead software earnings focus next week. Enterprise-focused software stocks have a busy week ahead with a full slate of earnings that includes Palo Alto Networks, great company, Salesforce, also a solid company, Autodesk, and Splunk. Palo Alto reports fiscal Q4 results after the bell on Monday. Salesforce reports on Tuesday. So I just wanted to cover these with you guys. Not going to go into any detail with them. If you guys are invested, I just wanted to put this on your radar. If you're not, so of all of these that I would like, if I were to trade one, it would be Palo Alto. So Palo Alto Networks is a cybersecurity company, obviously based in Palo Alto, California. That's Silicon Valley. So Palo Alto, great company. I've had my eye on them for a couple of years now. Been following them. They do great stuff. Again, I'm not personally invested, even though I am like fundamentally bullish on them. Palo Alto, cool company, cybersecurity. Once again, everything is trending digital. In this world, especially with this current economy, with this current pandemic landscape, it just expedited the process of, that's why like 5G, that's why tech is booming right now. This lockdown, this virus just expedited the process of that trend going even faster. Okay, so Palo Alto cybersecurity, this is great because so many things are being done digitally, and you want security through your cybers. All right, so again, we'll take a quick look at Palo Alto. Where did I freaking put it? Hopefully it doesn't. There we go. This is not gonna take me another 30 seconds. Sorry about that first one, you guys. My bad. Okay, so Palo Alto is actually looking like a solid buy right now. Again, you can see here, even since the March lows, like so many big tech stocks have just blown past the highs that they set in early 2020. And Palo Alto, especially currently sitting at, I believe, like 25 billion. Where is it at? Yeah, just about a $26 billion market cap. I think there's a lot of room for growth here. This is actually something that I might consider picking up prior to earnings. So once again, check it out. If I do pick it up, know the call options that I'm going to have in play. But no promises there. I mean, still a great company. Once again, what I really like about this is that they aren't too far past the highs that they set in 2020, unlike Tesla, unlike Apple, unlike so many of these even bigger plays that are becoming overblown. And yeah, I think Palo Alto is a great buy right now, personally. Like, again, I don't hold any now. I've been a fan of it for a long time. I might have to establish a position, okay? So that said, Salesforce, obviously, Salesforce is a good company. Probably seeing a hard time through this pandemic for obvious reasons. So not even going to touch on Salesforce, but let's move on to this article, you guys, just because, again, going down to the psychology, I feel psychology, as I always say, is the most important aspect of trading if you want longevity in this game. So we're going to touch on a little bit of the psychological aspect of this game, and I'll let you guys know. We'll read this, and I'll let you guys know what I think about it and what my thoughts are. Okay, so trading apps like Robinhood are having a moment, but users should be careful. Robinhood, the investing app that pioneered free trading, saw record trades in June. But what's good news for the trading app is likely not good news for users' long-term financial health, investing experts say. Time and time again, research has shown that the best way for the average person to accrue wealth is to invest for the long term. Routinely contributing money to passive funds that track and index, like the S&P 500, shows historically better results than stock picking. Investing in a mutual fund ETF spreads out risk. Betting it all on a handful of stocks does not. Okay, so what I should have said in the beginning, I wish I stated this in the beginning because this is something I've said in the past and I truly believe. The landscape is changing forever. And that is partially due to so much new retail interest. Again, the Fed is printing trillions of dollars, pumping it into the markets, buying junk bonds, giving it into the hands of people who are, again, it's great that people are getting becoming financially literate and wanting a better life for themselves and trying to accumulate wealth, having their money make them money pretty much, right? Which is great, which is what we all strive to do. Okay, that's the game. But it does also translate to naive individuals, like I said before. And again, the landscape is changing in the sense that this might be the new normal. Like, think about it like this. I haven't said this in a video yet, but this is what I've been thinking a lot, just kind of in my own mind. So people are out of work, right? Unemployment is at a record high. It's still bad. Okay, so even if it does get better week to week, which just recently it shows that it actually hasn't. Like we're back above 1 million per week, I believe. That's very bad. Okay, so it's still bad. Even if it does continue to get better, even a little bit, it's still net very negative, and I think that will likely continue. Okay, so there's a lot of jobs that are permanently lost. Okay, that's the sad thing. It's sad, but that's the sad reality of this situation. That, again, it sucks, but you have to accept it for what it is. All right, and I do like. So people are out of work. They're not getting income. They want their money to make them money. People are innately not lazy, even though it may seem like it sometimes. So people still want their money to make them money, and the markets are a very good way that people believe that they can make money. Okay, again, it's very risky. It's actually not now because, again, stocks just go up. In the words of the great Davey Day trader, El Presidente, stocks only go up. Stocks are only green, which it has been looking like. Okay, and that's. Again, that might be a paradigm shift that we're seeing. Stocks might only go up forever. I don't know. No one knows. But again, it just creates for a sketchy environment, and that's kind of what I'm going to get into with these charts once again. And I'll finish this paragraph, and then we'll talk a little more about it. Okay, so of course, apps like Robinhood don't force users to trade. They can be used responsibly. But critics say Robinhood gamifies investing. That's the perfect word to explain what Robinhood has done for investing. And again, a great thing, but sketchy. So, gamified investing. Where the heck was I? Critics say Robinhood gamifies investing, sending regular push notifications to users. I do recommend heavily that you turn push notifications off. I turned off my Robinhood push notifications a long time ago. You'll sleep a lot better. You'll be way less stressed. Trust me. Okay. So when a user makes their first trade, digital confetti falls in the app. It also makes suggestions to users what to trade next. Those behavioral nudges can encourage investors to act when only their short-term interests in mind. Okay, so again, just made the video yesterday about Robinhood raising $200 million in their last round of funding. It's for good reason. Robinhood is a brilliant app. It's brilliantly executed. They understand the psychological aspects of this game because that is their business. That's what they do as a trading app. They have gamified investing, offered free trading. And again, Robinhood is one of the best apps I've ever used. I still use it to this day. Link down below if you want to check it out. Again, it's a referral link. We both get a free stock. So cheers to that if you do. If not, it doesn't really matter, honestly. But anyway, Robinhood, great app. Like, if I could still invest in Robinhood even at the $11 billion valuation they're in, they currently have, I would. But again, it does create for a very gamified environment. And again, this might be the new normal. This might be a paradigm shift to where investing becomes completely gamified in a once very corporate, very suit-driven world, which is great. Again, it's great that there's so much retail interest in this market. It's great that there's so again, just so many kids, so many younger individuals, so many people who haven't taken pride in their financial literacy now educating themselves, and again, once like having their money make them money, which is a beautiful thing, and that's what creates true wealth. And I have nothing against it, but it does freak me out. So we looked at the PE ratio. Again, it does cycle back to just the market becoming a bubble, which I'm still confident it could keep going up. I don't know. Stocks could only go up forever. I don't know. It's just sketching me out even more than it has over the course of the past few months. The money just keeps printing. The people just keep buying. And when the market zigs, you zag. Okay, so I want to close out this talk with this chart that I did show in Friday's video, but I want to express it again just because it's very important. So this is S&P 500 short interest is at the lowest, is the lowest it's been in at least 15 years. This sketches me out too. Okay, so short interest is the amount of people that are shorting stocks. Okay, so in the beginning, I talked about Tesla. Tesla, a year ago, like a year from today ago, just back in 2019, was the most shorted stock of all time at about 30% of the full stocks in circulation were held up in short contracts. Okay, so it was people betting on the fact that the stock would go down. Okay, and that's part of what's contributed to this bull rally in the current stock market. There's a lot of high profile players, whales, who are now buying. And again, they're the ones with all the algorithms and stuff because the economy was so bad, still is bad, but the market has proven itself too strong. A lot of people were trying to short and they were getting squeezed out. So that means that they pretty much got margin called, if you guys are familiar with that is. But if your short goes past a certain limit, goes up too high, you have to cover your shorts, okay? You have to cover your positions and buy back that stock. And when shorts have to buy back that stock, it sends the stock price shooting up. And that is a big part of what's happened with Tesla. That's a big part of what's happened with general equities in general. So again, right now, short interest is the lowest it's been in forever. And again, you guys, it just sketches me out. I've been in this game for years now. The current market environment is just so whacked out. And again, this might be a paradigm shift. It's super. Obviously, you hear all the boom, like the suits, like everyone roasted Warren Buffett for playing the game wrong, and everyone at this point is kind of realizing that the market might just be changing. But the fact that everyone's realizing that and everyone's thinking that way really sketches me out. That's what sketches me out. Again, you guys, when the market thinks that it's established a new normal, that's usually when you should be on your toes, okay? Because that's probably when the paradigm will once again shift. When the market zigs, you zag. That's the way I'm hedging my portfolio. If you guys have kept up. Again, Warren Buffett recently took that huge stake in a gold mining company. I have a lot of gold miners, a lot of silver miners, a lot of hedges to the money printing in the US. That's why I love blockchain. That's why I love crypto. And I'm still bullish on crypto and blockchain. That's a lot of my portfolio. Even the biotechs as well, because those also act as a hedge to general equities. And again, that's what I'm choosing to play. We'll close it out with, again, me just plugging this. So check this out if you want. Again, along with the complete portfolio, so it's a full portfolio. I'll call options, I'll put options, I'll stock positions. I do send out a newsletter on every trading day talking about the trades I made that day, rationalizing my thoughts and just giving you guys my thoughts on the markets overall. So equities, crypto, precious metals, everything. Just what I'm thinking, what I'm seeing in the markets. Okay, so I do send out every trading day during market hours. So it's more real-time updates for myself. If you're interested, again, 7 days free. If you want to stick around, great. If not, no worries at all. Okay, so first link in the description. Once again, you guys, let me know if you're trading any of these stocks right now. Let me know if you found success. I mean, I have to imagine if you've been involved for even, again, the past week, like we just read, if you've been involved in these stocks for a week, you're looking pretty. You're in good shape. Okay, so let me know down below what stocks that we talked about today you're invested in, you're playing, and what stocks that we didn't cover that you may be playing, you may be bullish on as well. Okay, so always love learning from you guys down there. Always love talking. So catch you guys downstairs, and until next time, you guys always remember, take action, make waves. Peace.